Hello and very welcome to our latest urgent market update video, and that's for Thursday the 16th of November, and this video is brought to you by the Live Trade Room. Now, the title of this video is identifying that we have experienced a significant positive market news event which has led to major market moves, but the question is, what is next? So that's what we look at in this video. So let's get into it. Okay, so thanks very much for joining us. We're going to just take you through. We're just going to explain the sort of the positive market narrative which has kind of kicked in over the last week, and we'll discuss why those moves occurred, the reasons for it, the price action which has followed through, and we'll ask ourselves, where do we anticipate these markets going from here? So let's get straight into it. Then we'll of course start with our risk warning currently up on screen. Just take a brief moment to familiarize yourself with our risk warning. And do feel free to pause the video if you need. Okay, so let's get straight into it then. So let's bring up, first of all, we want to take you back in time just a little bit, just to last Friday, which was Friday the 10th of November. And we had this news event in here, consumer sentiment. You could easily miss it. It was 3 p.m. on a Friday afternoon. And consumer sentiment came in lower than expected. So if you look at the chart, we're on this sort of downward trajectory as far as the consumer is concerned. And we've missed now estimates in the last couple of months. So that just implies that there's a kind of a worrying aspect to the US consumer. So what was interesting was we were anticipating that that would lead to a little bit of sort of indice weakness, and in fact we saw the exact opposite, which was a little bit surprising to us, but it made us sit up and just take note of exactly what is happening. So if we look at the chart, this is the S&P 500, and we're going to do a little bit of analysis here, and we want to identify strong levels of resistance, and we'll show you what happened last Friday. So let me just take this off, and we'll bring these levels up. So we'll use a red line just to indicate this is a level of resistance, where every time we get up to these levels, prices start to roll over to the downside. That's how powerful support and resistance can be. So when we bounced off these lows, these markets rallied really quite considerably, and over the course of last week we had these prices pretty much moving sideways. And then once we saw the consumer sentiment figures kicked in, we would have anticipated probably a little bit further softening. It's not a good thing for the markets, and we saw this candlestick here. So you can see it's breaking above the monthly highs. You can see it's a strong level of resistance in at this level. And we still broke through that level, plus the upper trend line, we've kind of closed above that level. So that sends us a signal, and I'm going to zoom in. I'm going to take this off and zoom into that particular candlestick now in a little bit more detail. So this is when our bias effectively begins to shift, because we've broken above these very, very important levels. You can see the highs over here as well. And at that point, our bias starts to shift from a bearish bias to a bullish bias. So that's the first thing to take note. And then if we look at this news event, you'll see what happened on Monday. We didn't really get that much follow through, but something significant happened on the Tuesday. And that's what we want to draw your attention to. So let's go back to the Forex Factory for a bit of an update in terms of what happened, and more importantly, why it all happened in that fashion. So we go to Tuesday. So Monday was a little bit on the quiet side because there was nothing really that was likely to move markets. So on Tuesday, the markets were pretty much primed and ready. This is Tuesday, the 14th of November. We're primed and ready for US inflation numbers. And as you can see here, I suppose the most significant number is probably the headline, which has rolled over from 3.7 to 3.2. Again, if we look at this chart, you can see that inflation has been rolling over really quite aggressively since June of 2022, and it keeps coming and rolling over to the downside. We had a little bit of a blip in the last 2 or 3 months, but that's all it seems to be now at this stage. So it actually came in slightly below expectations. So the expectation now is for inflation to continue to roll over to the downside. And we're seeing that across all these central banks. So moving this narrative along, it's interesting. Out of the UK economy, we saw inflation come in previously 6.7. We're expecting 4.7, and we got a 4.6 handle on that. So a sizable, again, improvement in a lowering of inflation for the UK economy, and we're seeing that all across the board. So that brings us nicely to what is yesterday's news event at lunchtime yesterday, and we were trading this live. And we were a little bit concerned that core inflation was expected to come in a lot more negative than what we saw. So actually, yes, softening retail sales numbers, but actually they're not as bad as what the markets were anticipating. So that in itself is a good news story of sorts. But look at the PPI, the input costs. They are also rolling over quite considerably to the downside. Headline PPI month on month, we're expecting a positive 0.1, and actually came in much lower than that, minus 0.5, and the same on the core PPI numbers as well. We're expecting a positive 0.3 month on month. We saw input costs come down really quite considerably. So we anticipated that was likely to continue to support these equity markets, but that's not really what we saw. On Tuesday, we saw the full market reaction. We saw the full breadth, really explosive move to the upside off the back of the CPI numbers that were coming down, and they were looking really quite favorable. So that was a bit of a game changer. We saw the initial move on Friday, and we saw continuation on Tuesday. And what's puzzling is this price action here. We would have expected, and if you look at the charts, in fact, we'll go in and we'll have a look at the hourly chart. We did get a little spike off the back of that news event. So we rallied, and then it rolled back over. So the question we want to ask ourselves now at this stage is, if we look at the daily time frame, is where do we anticipate these markets go from here? So what we do have is now a support level just coming through these levels. There's the monthly high. So we've broken above the monthly high. We've broken above. There's now a structural break to the upside, and we're now above this descending level as well. And we've broken to the upside with extreme volatility. Now, there's many questioning that Tuesday's price action is a bit overcooked. So our overall bias at this in this sort of market cycle is for further upside. Now, what we're waiting for is a bit of a pullback opportunity to get into, and this could pull back. It could be a nice shallow pullback. It could be an extended pullback, or we could end up pulling back to monthly highs. But what we're waiting for is the next opportunity to start getting into this trade to the upside. So our bias is very much higher at some point, and that's really what our focus is allowing this market to pull back, and then looking to take this this trade back to the upside. And we can see that across all these equity markets. They're currently softening, but for us, and again, if you look at the NASDAQ on the daily time frame, we're very close. In fact, yesterday's high, we actually technically made new highs in this market. But above that, we would expect further upside to these more. If we look at the monthly, these are your all-time highs up at these levels, and you can see the amount of volatility so far to the upside. And that's why our analysis has shifted from, adopting a bit of a bearish view of these markets in the last 3 months, and now this month our bias has shifted completely, and we're now expecting further upside. So that's really what we can expect. And just a little comment on the euro, the dollar, and we'll take the euro as a little example, is that we've been in this little bearish, move. The dollar's strengthened quite considerably, but now look what's happening. We are seeing structural failure trade after structural failure trade, where we're seeing that clearly defined consolidation, which you'd expect, and now we're seeing this upward move. So this is a bit of a reversal of this previous bearish move. It's now turning positive. As a result, we're looking for further dollar weakness in this market over the short term until something significant changes. So that's the important thing to be mindful of in these markets. So to conclude this little video then, just to clarify, we are looking for the equity markets to continue to strengthen, and we're looking for the dollar to continue to weaken from these levels. We're just clearly experiencing a little bit of, let's just say, indecision in these markets currently. But when that begins to shift, when that narrative starts turning a little bit more bullish for the equities and a little bit more bearish for the dollar, I'd like to think that we will be looking for our next round of trades. So there's probably some very significant and decent opportunities in the pipeline over the short term, and we're constantly looking for that, something to change the view or change the picture of these markets, but we don't really have anything just yet. So in terms of narrative, we're really focusing on this kind of dovish Fed narrative, this rate pivot narrative, which means risk on. In terms of risk sentiment, we're looking for this risk-on view and appetite for risk under these circumstances, which means indices higher, dollar lower, and we will be looking at these US bond yields to see if they continue to make progress to the downside. So we've seen the 2-year rollover from 5% to 4.5%, and we expect further rollover to the downside across the 2-year and 10-year as well. Okay, so hopefully that sets out our position in terms of looking at this more recent positive market news event, which has led to this major market move to the upside, a bit of a strong pivot in direction, and fundamental and sentiment directional bias has now completely shifted from a bearish view to now a positive view. And we're expecting further continuation at some point in the not too distant future. Okay, then guys, so if you do have any questions about anything covered, don't hesitate. This is a sort of a convoluted, complicated sort of narrative that we're trying to navigate, really. So if you do have any questions, just do feel free to email us at support@thelivestrading.com. And that just about concludes this short video for you. So thank you very much for joining us as always. Do stay tuned for our next installment. And if you are interested in learning how to trade the financial markets, you are very welcome to join us. And now you can access one of our discounted, we have live trading bundles and education bundles as well, depending on your level of experience to date. And all of this you can find on our website, and it starts from just $59 for a calendar month. So just go to thelivestrading.com and do feel free to connect with us if you have any questions about trading these financial markets. Great stuff. So on that note, guys, listen, thanks so much for joining us as always. Stay tuned for our next video. We'll speak to you soon. Bye for now.